Welcome back, everyone, to 2024. And my name is Adam Rusmin.
Hello.
Victor.
Hi, everyone.
Thank you so much for joining us once again. And we're back to our roundtables.
Yep.
And today we're going to talk about a Singapore company, so quite a big one. And the Business Times released a very recent article saying that CapitaLand issued a profit warning. So it sounds very ominous. We're going to have a look at what's happening here. Why is there a profit warning? And if there is an opportunity to have a look at this. Okay, so before we jump into all the details, really quickly, what is a profit warning?
There's no profit warning in Singapore. There's only a profit guidance. So if you go to SGX announcement, you see that they actually released that there's a profit guidance for unaudited result for the full year 2023. Okay, or profit warning only applicable for Hong Kong stocks.
Okay, but so the Business Times use profit warning, right?
Yeah, because
it's
the
a catchy
message.
phrase.
Okay,
yeah, it's a catchy phrase.
Yeah.
And then usually Hong Kong, when there's a profit warning, the share price will crash. Right, but CapitaLand doesn't seem to crash, although the share price seems to be like low at all time, right, at about $3 at the time of this recording. Yeah.
So basically, good PR.
All right. So profit guidance, profit warning. So what's up with CapitaLand? Why is there a profit guidance?
So basically, December last year, I think on the 8th of December, they actually came out a press release say that there will be some. They are still finalizing on the valuation on all those properties that they own, or the portfolio of properties, right? So there's going to be a revaluation down because of the interest rate and all this. So all these revaluation will add up to become fair value losses, right? And it will affect their profit, okay? But on their core operating, their recurring, fee and rental is still stable, right?
Yeah. Maybe we just a quick recap on the CapitaLand business model. I mean, we do covered this before, when they
did a restructuring, right?
Yeah, restructuring from the CapitaLand group, right? So if you look at the business for CapitaLand, just to put whatever Victor said in context, they have two main businesses, right? One is the fee income related businesses, and then they have the real estate investment businesses, right? So these two main businesses, if you look at the fee income related businesses, they are basically a REITs manager. I think we are all very familiar with CapitaLand Integrated Commercial Trust, right? So they own shopping malls like your Plaza Singapura, and Raffles City, and many more other properties in Singapore, right? So CapitaLand Investment, they are the REITs manager for this REIT. All right, this is one of the REITs that they manage, and they also manage CapitaLand Ascenders. They also manage CapitaLand Escort, CapitaLand China Trust, CapitaLand India Trust. That's actually a business trust, and then of course CapitaLand Malaysia Trust itself. Okay, so they are the REITs manager, and they earn fees from managing these REITs. Okay, your base fee, your performance fee, your acquisition fee, divestment fee, right? All these are what REITs manager, external REITs manager will earn from their doing business in the REITs market in Singapore,
which is an asset-light business.
Yeah,
right?
This is a super asset-light nature, right?
Okay.
But if you go back to the REITs itself, actually the sponsor also own stake in these REITs, right? So CapitaLand Integrated Commercial Trust, if you look at the stake that CapitaLand Investment owns, is about 23%. So that stake is also entitled them to receive the distribution, right? The rental that they collect from all those malls, offices that they own in Singapore, right? And this entity, CapitaLand Investment, also actually enjoy this distribution income, right? So they own asset as per se, and then they are entitled to that. So this real estate investment trust is the one that they actually lump the revenue that they collect from the physical properties that they own. It could be a percentage of it, or it could be 100% building the whole building that they own.
Okay.
Yeah. So I think maybe just to put into context, like for example, our Iron Orchard, right? That asset is not in any listed REITs. It doesn't belong to anyone, right? But it's actually owned by CapitaLand Investment.
Okay.
Under the investment property. So these are all legacy assets when they split up with the development arm.
Correct.
Right.
Yeah.
They also own the Capital Mall Westgate in China.
Yeah.
They also got properties in the UK and also in the US and all this. And there's quite a few around the world.
So there's a long list of properties that they own under this real estate investment business.
And all these property move up and down in value, and they also move their income statements also.
All right. So what you're saying is because of these property values that are fluctuating, and because interest rates have gone up over the past year or so, because of that depresses asset prices.
Yes, possible.
So all this have been affected, and because of that, they need to recognize this on the
book.
On the books. Because that's the rule nowadays, right?
Yeah.
But their earning power is still the same.
All right. So the operating performance of the business is still the same.
Still the same.
Yeah.
Yeah. They
Okay.
still collect the same fee, the same rental.
Yeah.
Alright.
So those are the public funds, the REITs that they manage, and then
Okay.
of course they also own stake in those REITs. And then secondly, they also have their own investment properties that they own in their own portfolio.
Okay.
And then of course third thing that they do is they also manage public funds.
Private
Okay.
funds.
These are what we call it as private funds. Okay.
Yeah, okay.
So they do, I think, have close to, I think the number of funds that they have, I think about 35 at this stage. And these are the money that they raise from institutional, right?
Yep.
It could be your some sovereign wealth fund, and they use this money to invest in properties as well.
Yeah, and they
Yeah.
also own 20% stake in all these funds that they
Okay.
work together with the private. So this also move in values also.
Yeah. So every
Okay.
time they set up a new fund, they want to manage, they get third party funds to come in. The third party or LP limited partners who want them to commit a stake, right?
Yeah.
I want you
So
to have
skin
a
in
skin in the game.
Yeah.
Yeah, so they have to commit that, right? So that percentage money that they put into the fund also entitle them to own some of the physical property.
Yep.
Okay.
Right. So again, this again split into two parts: the fees related business where they just earn fees managing this fund, and then of course they also have this rental income that they earn from the funds
Yep.
itself.
So I
Because
think a
they
lot
own
of people
stake,
think that CapitaLand investment is asset light. That's what they are going to, right?
Yeah.
I mean, yes, they are asset light, but they are moving towards asset light. So
Okay.
they are slowly trying to divest all those like physical property that they own, maybe into their private funds and all this. So they are slowly divesting and moving towards the asset light, but they are now not really fully asset light yet.
Okay.
Yeah.
Okay.
So a lot of this hard asset, I think, eventually will be fully divested into either the listed fund that they have or the private funds that they are currently managing, or it could be sometimes third party. But most of the time, they divest it into their own funds that they manage, so that they can actually earn that fees again. So it's a
Okay.
very good business model.
It goes to some of the REITs as well?
Yeah, it goes
Possible.
to yeah.
Okay.
Possible.
Yeah.
So
Yeah.
again, it's a very sticky business. Once you go into the REITs, and that becomes the fees will just keep on coming
Okay.
in, unless they screw up big time, and then people want to kick them out as a
Alright.
REIT manager, right?
Okay, so I
which
mean
is what
they-
happened to Sabana.
Okay.
Yeah.
So they have to do their job, make sure that all the REITs are well managed, the funds are well managed, they earn a positive return,
Yes.
everyone receives their dividends, everyone's happy.
So the fair value losses that actually are those investment properties that they own, and some of this value is going to come down, and as of 2023 because of the higher rate. And of course, I also think that some of the assets that they own are actually in China, and also other Asian countries like Australia, Japan, South Korea. So some of these countries, their currency strength have weakened against Sing dollar. So
Okay.
when they report back to Sing dollar, I think the values is going to be lower. That's why that leads to the profit guidance or warning,
Yeah.
right?
And it's non-cash.
Yeah, these are
Okay.
all the non-cash item, and that currency affects them, the value of those property. And secondly, because of the higher capitalization, higher interest rate, right? Some of this property value decline in value. I believe a bulk of it might be coming from China, right? So China is under a lot of stress, especially you hear a lot of property crisis in China. So that caused the profit warning, and I think the share price to stay low at $3 for a few months already.
Okay.
Yeah.
All right. So I think the question that an investor watching this, they're looking at CapitaLand, they will probably ask, is this issue temporary or structural? It sounds like it's a temporary issue because property values fluctuate all the time.
Yes. Every year they have to revalue the property.
Yeah. So what do you think in this case? I mean, China could be, I don't know, for example, someone could think that China is more of a long drawn out affair because things are not looking so rosy.
Yeah.
Maybe the property values there will be more depressed for longer. I don't know what the percentage they have in China.
Yeah.
But do you think this is basically a temporary issue?
I think if we look at the China market, the property market, the residentials, the crisis actually mainly revolve around those property developer like China Evergrande, Country Garden, those who doesn't have the sustainable business model, and a lot of residential project that they are committed to build. Some of them got stuck halfway because of the liquidity issue. And the good news about some of the CapitaLand portfolio, they actually own mostly commercial properties, right? They do have the lodging business, student accommodation, and then some of the under Escort umbrella. And of course, that lodging business, we're not going to talk here, okay, because it's separate altogether, but it's still part of their business, right?
Yeah.
But
And
if you look back
they don't
to
have
the
residential.
yeah,
Okay.
they don't have a residential exposure, right? So that part, I think, is sort of like, we know that, hey, they are not really directly affected by that.
Okay.
And on the commercial market in China, of course, it's big, right? So there are some commercial assets in China that didn't do well. Some malls are very quiet, right? And those are not well built. Okay, generally for CapitaLand, they are a lot better. Okay, in terms of quality, the selection that they go for, right? So I don't see the stress of property crisis in China will directly affect them, but
Okay.
the overall sentiment still will pull down the valuation,
Okay.
right? But in terms of rental collection and all that, I think they are still pretty
Okay.
stable as a whole.
What about
Yeah.
the rest of their portfolio? So, I mean, this is basically a temporary issue? I mean, once, let's say, for example, a scenario where interest rates go back down because inflation is in check and everything, what do you think? You know?
The property value will re-rate.
Yeah.
Okay.
So again, Singapore, I think is core market is very solid. So
Okay.
you have all those REITs that they own, CapitaLand, Integrated Commercial Trust. Those are quite rock solid, right? So interest rate tied closely to the US Fed. Well, in China, it's opposite direction. Actually, China is government is actually reducing the interest rate, and of course they are pulling a lot of levers that they have to help this property crisis to tide through, right? So you see how they ask the banks to change the loan rate for existing mortgages. Basically, they have these existing mortgages. They can pay lower rate because of the government intervention, right? So not good for the bank, but good for the property market as a whole because of the crisis that they are going through, right? So there are a lot of levers that they can do. One of it is, of course, the interest rate. They're trying to reduce lower to reduce the stress that we are seeing here. So now I don't expect a big crisis coming from China, okay? So even if the interest rate were to go up in the future, that probably is a signal that the property crisis will be over in China, okay? Because their big exposure is actually coming from China. About 31% of their total asset is exposed there, 29% in Singapore, and then other Asian market is about 18%, India 3%, and then non-Asian is about 19%. So it's quite diversified.
Okay.
Yeah. So it's a very diversified portfolio all over the places, actually.
Okay.
Yeah.
So you feel maybe China is the only overhang that they have,
It could be.
and the rest of the other markets that they're in, property prices could just basically normalize.
The currency could normalize.
Or the currency could just go back. Yeah. So that's your opinion on this. Why this is most probably a temporary thing, right?
Yes, correct. Yeah. So if you look at their first half result, I think the real estate investment businesses, we saw that they actually reported lower revenue of 4%, and then EBITDA dropping by 20%. Okay. A large part of it drop is due to the absence of contribution from 2 office properties that are divested in 2022, which then of course the full impact will kick in 2023, last year that we saw, and then lower contribution for some of the property in China itself because of the slower than expected growth in Chinese recovery.
Okay.
Yeah.
All right. So if all this is, if you feel it's a temporary issue, then isn't this an opportunity to have a look at CapitaLand at this point in time? What do you think about that?
I think it's all boils back to the valuation.
Valuation. Okay. Yeah.
Yeah. So if you look at the share price of I think CapitaLand investment, it has been hovering between around $3, right? And then it went back up early of last year to about $3.80. Okay. So
and now it's about 301.
301 at the time of this recording, right? So yeah. So if you look at the price is about $3. So of course we need to determine how much this business is going to worth, right? So if you look at their first half result, I think they did mention that their operating profit after tax, which is adjusted for all those fair value gain and losses, that eliminate that. So if you look through the earnings, the quality earnings, this is the better metrics to look at. The profit guidance, they already mentioned that there won't be any significant impact despite the write down of some of this property, right? So but there are 2 businesses that you are looking at, right? First is the REITs manager fee-based businesses that you need to value it separately, and second is that they do have physical properties that they own and they collect rental income and distribution income either from REITs or some of the public funds that they own, right? The private funds that they own. So these 2 businesses, of course, for physical asset that they own, I think more straightforward, you can look at it as like net asset value, right? Which they actually provide as of first half of 2023 is about 14.5. Let's say if it's further dropped to 14 billion by the end of the year, you can take it as a value that their physical property will be worth in their portfolio, right? So that's one way you can look at it. And then of course the other business is the fee-based business that you can value it based on like price to earnings. And yeah, so if you look at their first half, their operating profit after tax, they actually split that out. About close to 50% of their profit after tax, operating profit after tax, right, comes from the fee base, right? So that comes out to be about, if you analyze it, it's about 340 billions.
344.
43, 44 billion.
Then the fee base is about 168 lah.
Yeah. So if you
times 2 lah. That's first half. Then times 2.
So for a fee-based business, maybe you can multiply it by
162 times 168 times 2. Sorry. Yeah,
So it's
that's
about
320, 320.
320, yeah, 330,
yeah.
and then you multiply by, let's say they will trade at 15 times earning for a good business, fee-based asset-like business and sticky business as recurring nature. That will comes out to be about, I think, 4 billion, right? So 4 to 5 billion,
Okay.
right? So and then you plus your asset that they own is about 14 billion. That will gives you about 18 to 19 billion market value, the intrinsic value of CapitaLand.
Okay.
So on the per share basis, it's about
You divide by number of shares, about $3.80.
$3.80.
Okay.
Okay, I'll put a range between $3.50 to $4.
Okay.
That would be the estimated value that I think CapitaLand is worth.
Okay.
Right, conservatively.
All right.
Yeah. So at current price of $3, yeah, there's some margin of safety there.
Okay.
It's undervalued.
Okay.
Yeah, but it's not like those like screaming buy.
So it's not extremely cheap, but
It's not
it is
extremely cheap.
undervalued at this
It
point
is
based on
undervalued.
this model
Yeah.
that you've used to value
Some of the parts,
the sum
Yeah,
of
of course,
parts,
some people will just take their operating profit multiply by 15 times, right? But I think we are just trying to dissect the different businesses. We value them differently.
Okay.
One way, that way also will might
Then
work.
he haven't include the rental income from the investment property. This is just the NAV, assuming liquidation only.
liquidation value.
Yeah,
Yeah.
okay.
So that's why he give a range.
So this is more conservative in a sense.
350 to 4,
It's just one way
Yeah.
of
One way to
valuing it.
yeah. Yeah.
Okay. Again, no recommendation to buy or sell anything. We're just having a look at how we can understand the business and value it according to its different.
Yeah, and the other way that
segments.
I value it is based on their operating profit after tax. So basically, I manually calculate myself the CapitaLand investment market cap since listing until now, and then I just simply divide by their operating earning after tax since 2021.
Okay.
Right.
So this
until
removes all
to-
the asset valuation fluctuations. And
Yeah,
all
so that basically you take into account of the asset that they are generating rental income and all that as their earning power.
Yeah.
And if you base on that, I think now they are currently trading at -2 standard deviation, which is undervalued.
That is undervalued.
Yeah, it's undervalued. It's attractive. I mean, based on their 3 years of listing record, right? Of course, it could go lower. And the other thing I think I also want to mention that this company also pay dividend.
Yeah.
Right. So they have been paying 9 cents in 2020 and then 13 cents in 2021. 2022 is about 12 cents. And then
Regular
there are
dividend.
regular dividends, exclude the special dividend. So this year, because of the profit warning, we might see a lower dividend, but it's up to the board to decide.
I mean, they could maintain it, right?
Yeah.
If because it's a non-cash
Yep.
item when it comes to profit.
But they
Correct.
pay out based on profits.
Yeah.
Okay,
If
so
they
because of the
elect-
payout ratio.
Yeah, if they elect me as director, then I'll approve the dividend. Everybody happy.
Yeah.
Okay.
So I would say 12 cent
But
dividend.
of course, in the event where the dividend really cut,
Mhm.
then the share price will move with it.
You
right?
think
It might drop.
It might
It might
drop
drop.
because
The
the
probability
investors
is very
here-
high because
yeah.
investors in Singapore tends to go for dividend, right? If you cut your dividend, then you just say off the thing.
Okay, then that
Right.
could be an even better opportunity. At the
Yeah,
time.
yeah. So I think it's still too early to look at it, right?
Mhm.
You wait for the result come out and see how bad is it, and
Because right now it's just a guidance.
Yeah,
we're going to see what's going to
Yeah.
happen when it's when they actually report it.
But
Right.
for people who got FOMO, fear of missing out,
Okay,
first
just
nibble.
a
Yeah,
nibble.
nibble. That's what they always say.
Just give it a little nibble.
That's what I hear always say. Nibble.
Yeah,
Yeah, a
yeah.
little
Again,
bit.
no recommendation to buy
Yeah.
anything. Just please do your own research and due diligence.
Yeah.
This is what we think about
And
CapitaLand.
Yeah, and of course for Alpha members, you can go and watch full research on this company. I think Peter has done a good job on that.
Yeah.
Yeah, but here we're just talking the surface, scratching the surface.
Yeah. Okay. So in
Yeah.
Alpha Lab, we do break down quite comprehensively
Yes,
the business of CapitaLand and what
Yep.
and we do track it over time as well.
it's a good business model.
Yeah.
Yeah.
Okay. So I mean, I remember Warren Buffett also mentioning that once the accounting rules had to change and they had to take into account asset values
Value,
into all the way down to its net profit, you don't really get a clear picture of how the business is really performing.
Correct.
Yep.
Yes.
So Buffett always mentioned this in his letters, his annual letters as well.
And he has this look-through earnings,
Yeah.
which I think he adjusted by himself. I think in the case of CapitaLand investment, we look at their operating
Similar concept.
similar
right?
concept,
Yeah.
profit after tax,
All right.
which is exclude all your
Fair
portfolio
value
gain,
gains or
losses, fair value
losses.
gain or losses.
All
Yeah.
right. Okay. So once again, if you want to, again, Rusmin basically broke down how we value CapitaLand. Do watch that part of the video if you want to just go through and get
Victor did a deeper analysis on
in,
this actually.
in
Yeah.
Alpha Lab, right?
Alpha Lab,
yeah,
yeah.
okay. But if you're watching this on YouTube, just do check it out. Again, if you just want to be more clear about what we're talking about, you can always rewind this. But yeah, this is what we think about CapitaLand at this point in time.
Yep.
All right. So, is there anything else you want to share about CapitaLand?
No.
Nope.
Yeah. Hopefully
Alright.
drop to $2.
Assuming the fundamentals remain the same.
Yes.
Okay. So with that, my name is Adam. That is Rusman.
Yeah.
Victor,
you.
Thank you so much for joining us once again in the new year in 2024. We are happy to be back. Any questions about CapitaLand, you can ask us. You can also ask Investor Relations if you have any questions for them. And of course, like this video if you like what we're doing, and of course subscribe to our channel. Many more roundtables coming up, and we'll see you again.